Hey, hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 12th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media, where I've talked about the economic data, the geopolitical environment, and how those two come in and impact the overall markets. With my market analysis, well, I do the same thing in these daily market commentaries, but I'm layering on top of it some option strategies that I find to implement into into my portfolio based on those market assumptions I come up with. Now, I also have gone a bit further for you guys out there and built some guidelines that you can follow specifically to find the right option strategy for that market assumption you come up with in your own way. Also, let's get on with the overall economic data. Without further ado, let's get into it. Across the pond, we got the German bond auction. Came in pretty low, was lower than expected there. Also, industrial production out of Europe coming in lower than expected at 9.1%, expected to be 10%. So again, 1 percentage point lower there. Now, yesterday we got the the PPI, which is producer price index. Now we're looking at the CPI, consumer price index, to see if those higher prices we saw in the producer price index get passed on to the overall consumer in the CPI. And sure enough, they are passing it along. And we got CPI coming in at 0.6%, expected to be 0.3%. Consumer price index, core stripping out food and energy, came in at 0.6%, expected to be 0.2%. Actually, what's happening there is we are seeing them pass on higher prices than what the prices are that they are seeing. So they are creating inflation. That is something that is generally considered a good thing. But we are in an economy that really shouldn't be wanting to see inflation at this point, because that is probably due to the fact that we're seeing a weaker dollar rather than for demand of these products. So that is a bit of a conundrum there. Then we got crude oil inventories expected to be a drawdown to 3.4 million barrels. Came out as 4.4 million barrels, so a million barrels over what expected. Last month's number remained unchanged at negative 7.4 million barrel drawdown. So we should see a little bit of buoyancy here in crude oil. We are seeing it hold on to those 40s. That is the new paradigm that we're starting to see here. And we can see that the markets are moving a little bit higher. A lot of things going on in the markets right now. Yesterday, we saw a big turnaround from when I was doing the daily market commentary. You remember me talking about, well, I think I missed an opportunity in getting out of some of my options that I'd sold some short deltas in. Well, at the end of the day, the market just kind of fell out of bed. Today, getting a nice rebound in especially the tech sector. So a lot of those that I was getting out of for that sector rotation was, good timing. Sometimes it's better be lucky than good, I guess. All right, so let's get on to, like I said, the markets, because we're going to see how that economic data is impacting the markets. CPI doing rather well, should be giving us a boost. And we're seeing crude oil up, as we talked about. Gold making a big turnaround. I thought that when we were down 80 points yesterday, it was a little bit away from that 1923 that I said was sure to be tested. Well, it did go down there, bounced off of that, settled right in and around where that point of control, that Fibonacci is, which lines up with the previous all-time high. That is going to be a major line in the sand, okay? We were trading in the 2000s. Today, making a bounce again. This is looking like a solid bottom here. We've talked about the weaker dollar, right? More stimulus is going to weaken that dollar even more. It was a bit surprising to see a lot of people pull money out of gold yesterday, but today we're starting to see that rebound. So I've got a trade that I've added based on that. I think that this is a nice correction. Get out of those get some of those weak hands out of the market, which is what happened yesterday. Today, seeing the gold futures bounce by about $11 right now. Not quite making up that $100 sell-off, which was a massive sell-off for gold futures. You don't often see that. Recently we did over when the pandemic first started, but now seeing that sell-off is a good sign. It flushes out those weak hands, allows the market to start rebounding there. Bonds off by another half point today and testing that 50-day simple moving average. But keep in mind, we've talked about this time and time again. Between 177, 183, those are basically the major support and resistance areas for gold futures. Bond futures. I expect it to stay there because we are going to continue to see interest rates at extremely low levels for probably at least 2020 and maybe even a couple of years. All right, VIX is coming off. Why I kind of let the cat out of the bag. We've got the equities moving higher. NASDAQ up 300 points almost on the day, completely engulfing yesterday's sell-off, back above that 9-day simple moving average, which is short-term, long-term, or short-term bullish, bearish signal. Back above that would be a signal that we are continuing in this 45-degree line here. And as a matter of fact, I probably should slap up some trend lines here and just kind of, I'm going to do a quick and dirty here. I'm going to pick right, why didn't you want to land for me? There we go. Let's try and do this. Pick this trend line. Why aren't we doing a drawing line? Now it's, all right, I'm going to try and do this, ballpark it, and then slide it. If I can get the thing to drag. All right, here's what I'm going to do. I'm going to try something different, and I'm going to, I want to duplicate this, remove old drawing. No, I want to do that. Where is the duplicate drawing? That's what I want, because I want to slide this just slightly up right there, because that seems to me to be a nice trend line. Let's try that one more time. I'm going to duplicate that drawing and slide this to the upper band of gold right there. So that was a pretty good ballparking on gold there. All right, so that is, on the NASDAQ, that is a pretty good trend channel that we've got there for the NASDAQ, keeping in mind that anything breaking below or above that is a break of that trend channel that is quite nicely formed there, as you can see. I could probably tighten it up just a little bit, but for the sake of getting this over with, you guys can get a pretty good idea as to where that line of those trend channels are right there. All right, so moving on to the Dow Jones Industrial Average at 250 points there. Yesterday, you can see where this topped out. It looked like it was going to be pretty bearish, but we did not confirm that. As a matter of fact, we've only made a move to the upside there in the Dow Jones, so that whole topping pattern isn't looking so good unless we see a massive sell-off like we did late in the day. But I don't really think that that's going to happen. It just seems like there's a lot of pretty good news out there with some different types of vaccines or things that will help with COVID. Some people are taking the plasma and taking some of that the antibodies from people that have had COVID and regenerating that, and then giving people that drawing a blank right now, giving people the antibodies for COVID, and they're doing a big test right now on it with people getting that have been affected by COVID or in and around somebody that is sick with COVID. They're getting some antibodies too, so they're doing a big trial there. All right, so E-mini S&P's up 45. NASDAQ, obviously the big leader of the day to the upside. Now that whole stay-at-home trade versus the reopening trade isn't following through right now today. I was expecting it to kind of have a little bit more teeth to it, but that isn't the case as of right now. So let's get on with the breakdown of the E-mini S&Ps. You can see this is the sell-off I was talking about late in the day. It was like just a fall out of bed onto your face kind of sell off and across the markets. But overnight inventory very long and no attempt to flush those guys out. So that is a very bullish feel to the overall market. When you don't see that overnight inventory get flushed out, at least earlier on, then it usually is a continuation move. So we'll keep an eye on that. I think that the market will probably finish close to the highs of the day. All right. So let's talk about some trades that I've added to my portfolio. This is gold, GLD, which is the ETF, mimics gold futures. I don't want to go out there and necessarily do the futures. I kind of like to get the ETF in there. And you can see volatility has expanded around these moves recently, so I'm able to get in there with an ETF at 41 IV%, which fits my rules. Anything above 30 IV%, I'm looking to sell premium. And with a bullish assumption here in gold, or at least I believe it's going to hold on to GLD, hold on to the 180 handle here. I don't think that we're going to go back down below 1923, which we've seen over there in the gold futures, right? I think it's going to hold on to that. I think we're going to retest 200 in gold, which would be very in line with 190 handle in GLD. So with that being said, I went in and sold some options in there and sold the September 170 puts in there for $1.30. So making that move to the upside. Volatility coming out. We can already see volatility starting to come out of this, which helps me with that premium, right? We've talked about this. 1 percentage point down move in volatility affects my premium by the corresponding vega, all right? So go check that out. Look at your option montage. You can see that 1 percentage point decrease in vega helps me out, especially you get a directional move in your favor, then the delta starts helping. Why did I pick this September? Because that's where we see the theta coefficient really start ramping up. That thief in the night starts coming and steal your premiums, which is what I want when I sell options. All right, so check that out. Also, go to ProTraderStrategies.com if you're not following along with what I just said, because I'll drill down on those details in those webinars. All right, so check that out. Also, tomorrow we're going to be doing one on the short put spread. So if you don't want the high risk of, quote unquote, high risk of selling naked options, check that one out, because that could be a good strategy for you on a bullish assumption with high volatility. And I'm going to be drilling down on why that is the type of strategy we're looking for. Now, PENN. I didn't do anything in PENN. I was going to hold off on this. So let me pull back up another chart, because I want to talk about what I've done yesterday. I forgot to talk about that too. Facebook. I told you I was leaving in those options to get out of my position in Facebook, because we got that big sell-off at the end of the day. That's kind of what I was looking for. And I had sold the August 290 calls in there for $1.39. Now, according to my rules, I'm going to be looking to get out of that somewhere around 70 cents. That is 50% of max profit. Well, I put in an order and left it in, got picked off at 60 cents. Very happy about that today, especially with Facebook being up on the day. Now, volatility coming out today probably is in and around where I probably got out of anyway. I need to go and check that out. Let's just take a look at it real quick in Facebook. To see where that pricing is on those 290 puts. 290 calls in Facebook are trading right around 50 cents. So you can, I would have been able to get out a little bit better today than yesterday, but happy to do so. It met my my mandate of getting out at 50% of max profit there. Adobe as well. Oh, sorry, here. Adobe is another one that I got out of as well, and I had sold the August 470 calls in there for $1.62. Now I'm looking to get out at around 80 cents. I got out at 84, so right in and around where my strategy was for getting out of 50% of max profit there. Just to take a look at Adobe to see where it's at right now. Get a ballpark idea on that trade, which was the 470 calls in the August 470 calls, $1.25 right now. So good exit there, despite the fact that you can still see volatility coming out. That volatility coefficient in this probably gave me about 30 cents to the downside yesterday, which helped out as well. All right, so those are the trades I got out of yesterday. Something I want to talk about is with PENN. PENN, actually, last one, I don't want to talk about PENN. Sorry, all over the place today, you guys. Bear with me. Intel. Intel is one of those stocks that I had just recently, been talking about dollar cost averaging, lowering my overall cost basis on this. I bought Intel outright in one of the daily market commentaries because I felt like it was bottoming out. Well, I bought it at $51.27. Obviously, didn't hold on to this Fibonacci I was expecting. We've gotten a little overextended to the downside. And if you guys remember, in Intel, I've been starting to sell some puts in there to lower my overall cost basis. Originally, I sold the 45 puts in the August for about 48 cents. I covered those for 14 cents. So I've lowered my overall cost basis by about 30 cents. So right around $51 is my break even at that point. Now, decided to roll it out and go into the September and sold the September 45 puts again for 65 cents. I get to keep that money. If I get put the stock at 45, I'm more than happy to take that. That would be, relatively at those low levels from the COVID. And this is all about some production issues on one of their chips. I'm not too concerned about that. They always have those type of problems, and it's never affected them to this extent. So I'm taking advantage of this sell-off in order to do a little bit of dollar cost averaging if I have to, and buy some more at 45 to add to my position there. And if I don't get hit on those, then I lower my overall cost basis by another 65 cents or so, depending, maybe 50 cents, because I'll probably get out or around 14 again if I have that opportunity. So I'd lower my overall cost basis by another 50 cents. So that's how I'm staying mechanical with this position that I currently have. More than happy to keep it. Now I want to talk about PENN. I couldn't wait, right? I've been trying to talk about PENN forever. A new all-time high at $51. Why is PENN making this move, this turnaround? Well, even on Monday, I was all nervous. I was like completely wanting to sell some covered calls against this. I was trying to sell the 65 covered calls for $1. Market just completely fell out of bed. I wasn't able to do it. I wasn't going to chase it. Would probably be still considering getting out at 65 if it shot up there right away. Well, we've got some new news on the horizon here, and that is the fact that this morning David Portnoy went on Instagram and did an announcement that he is joining forces with Deion Sanders, and they are going to be, Deion Sanders left the NFL and is now announcing that he is going to be a part of Barstool Sports. I think this is going to be pretty big. Deion is about as big a name as you can grab out of the retired football players, and they are, I think, going to make a great team. They're just two huge personalities, and I think they'll play well, play off of each other nicely, and this could really catapult the Barstool Sports even further through social media and everything else. So something interesting to note. We just talked about that they are making this all-time high in there with Penn National, but let's look at Las Vegas Sands. Las Vegas Sands, engulfing pattern, not looking too good. Why? Because we heard yesterday that college football, the Big Ten, the Pac-12, I believe it was, are moving their season to the spring. But some of the other college are going to still stay on track and try to hopefully get started by September. So that's caused some of the people like Ohio State to want to leave the Big Ten and go into the Pac-12. So it is a huge scramble right now, but companies that are relying on some of these betting are really being affected. Plus, they are also brick and mortar where people are going to be touching different things. I don't think that this is going to impact Wynn in Las Vegas that much with the college shutting down, because their sports book is so small to their overall bottom line. It really is in the one-armed bandits that they have. That is the majority of their overall money makers. So the fact that they're kind of selling off on this college or the sports betting really is probably an opportunity more than anything else. I've already got exposure with PENN, not to Macau, but I do have exposure to the gaming, and I'm going to stick with that PENN trade. All right, that's all I got for you guys. I went a little bit long in the tooth there, but we do have to talk about one other thing really quick, and that is our disclaimer. And we are an educational company. I'm not trying to get you guys to take on all these trades that I've done. What I'm here to do is talk about how we stay mechanical, how we follow these guidelines that I've set up and built over my 25 years of trading. I've kind of streamlined the process for you so that you guys can when you come up with an assumption, you can take that, look into the internals of this underlying, and build or find the option strategy built for that environment. All right, so check that out at Pro Trader Strategies. Also, pause the video and please take a moment to go over the disclaimer, as we are an educational company. I am not trying to get you guys to do the same trades as me. I'm not giving you guys investment advice. All right, so if you can't take that, take it easy.